We'll show you David Tepper's crazy investment technique in this video, from day trader to billionaire. But first, please accept my warmest greetings if this is your first visit to our Smart Stocks Academy channel. To be the first to know when a new video like this is released, hit the like button, subscribe, and click the notification bell next to it. Now let's get to the video as soon as possible. David Tepper was anxious for a way to earn money in order to pay for his education. Tepper thought he could become a great trader because of his arithmetic skills, and he immediately discovered a successful pattern. Options were relatively new in the late 1970s. Certain option pricing, he discovered, are always a little slow to adapt to changes in their underlying securities. This, Tepper believes, is an ideal opportunity for an arbitrage. He was able to create steady money with a strategy, which he used to pay for all of his graduate school fees. Tepper grew up in a poor family in Pittsburgh, Pennsylvania, and aspired to be wealthy and live a better life. He was well aware that it would not be delivered to him. So, he focused himself and his studies, aiming to complete college in 3 years in order to save money while simultaneously working part-time. David Tepper, out of all hedge fund billionaires, is the one who started from the bottom. He was also subjected to a great deal of childhood trauma.
Despite these good things about my dad, he had a bad side too. He was physically abusive to me. I'm sure it was a cycle that he got from his father, and his father got from his father. In my young life, there was nothing more terrifying. There was no greater adversity. But I prayed to God that I would never be the same to my children.
David Tepper acquired a job in the Treasury Department at Republic Steel in Ohio after getting an MBA from Carnegie Mellon, but the company was in financial trouble. He was first introduced to the junk bond market there. Michael Milken, an investor, pioneered a vast market for high-yield bonds, sometimes known as junk bonds, in the early 1970s, putting a wild hypothesis into effect. Tepper quickly recognized that he had a knack for dealing junk bonds, which led to a position of the fabled Goldman Sachs. He made a lot of money for Goldman Sachs, but anyone can make money in a bull market. The true test will be how well you do in a bear market.
Good evening. Today is Black Monday, the day the Dow dropped more than 500 points, the day the Dow dropped more than 22%, almost double the rate of the Black Monday that signaled the beginning of the crash of 1929.
Almost every trader at Goldman Sachs lost money during the 1987 market crisis, except David Tepper. He anticipated the crash and set his entire portfolio to short. He made a lot of money by betting against other people. There is a competitive culture at Goldman Sachs. David Tepper was not highly regarded by his co-workers.
But when I came up for partner, I got shot down. And I was incredibly upset.
Tepper had had enough and began trading aggressively on his own account in order to raise enough capital to open his own fund. Tepper raised $57 million for his new hedge firm, Appaloosa, with the help of his connections and Goldman Sachs.
Because I didn't end up a partner at Goldman Sachs, I started my own company 25 years ago in 1993 called Appaloosa, and ended up doing something that was a lot more fun and made my life better in so many ways.
Opportunity knocked on his door as soon as he launched his fund. Tepper bought many bank debts in Argentina immediately before the economy started to recover during the South American crisis in the early 1990s. And as a result, in 1995, the fund had earned a 30% return. David Tepper is an unusual value investor. As a result, he reminds me a lot of Seth Klarman. They are willing to gamble big on something that is undervalued if they find it. And during Tepper's early years, he consistently outperformed the market until something happened. The Russian central bank defaulted on his debt, in 1998, sending shockwaves around the world. Tepper, like many other investors at that time, invested hundreds of millions of dollars in Russian bonds, believing that a government could not relieve debt, but he was mistaken. Tepper lost $80 million when the Russian government refused to pay its debt. Then Tepper did the unthinkable. He noticed that the market had been overly negative about Russian bonds after the incident, causing them to be severely discounted. He'll mow on the same bonds as before. He had gained 61% as a result of his bets, recouping his prior losses by the end of 1990, and he had profited much more. For contrarian investors like Tepper, distressed debt has turned into a gold mine. Tepper made a 67% net return on distressed bonds in 2001, but he would invest in whatever he thought was undervalued, whether for the short or long term. He's also generated large profits year after year by investing in the off-the-beaten-path enterprises like Mirant, an energy firm, but none of it compares to the opportunity presented by the 2008 financial crisis.
7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets.
Let's talk about the speed with which we are watching this market deteriorate.
We're red everywhere, essentially, down by 4-5%.
Tepper, like everyone else, took a hit in 2008. Despite the fact that his fund was down 28%, he remained enthralled because he saw so many discounted chances. He was not going to let emotions influence his trading because he understood his losses were just temporary.
So the point is that if your thinking and your emotion is the same as everybody else's, then you cannot do the outthinking and what I call the second level thinking, which is required to act against the herd. The common word is contrarian, and to sell at high prices, which are high because other people are optimistic, and buy at low prices, which are low because other people are depressed.
As a result, Appaloosa began purchasing whatever common, preferred, and junior subordinate debt it could find. AIG, Bank of America, and Citigroup securities can be purchased for as little as 5 cents on the dollar. And as promised, his greatest efforts were rewarded. Bank of America has increased by more than 330%, while Citigroup has increased by more than 220%, but AIG has increased the most. From AIG alone, he made $1 billion. As humans, we are subject to a variety of cognitive biases. People have a tendency to look for patterns that aren't there. Many individuals are flocking to the stock market casino because of Robinhood. It is possible that David Tepper's success is due to chance, but there are 2 things he does over and over that we may learn from. He never trades with leverage and always trades with a big margin of safety.
Yeah, actually, Appaloosa and Palomino are one set of funds, and then we have thoroughbred funds. So Appaloosa and Palomino will do anything. Stocks, bonds.
How much leverage?
None.
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 What do you need leverage for?
Tepper bought Washington Mutual's debt between 50 and 60 cents on the dollar when the company was on the verge of bankruptcy. Second, his plan was mostly based on events. Not only did the asset have to be undervalued, but David Tepper also tried to find out why it was discounted and what circumstances might cause value realization in the future. These occurrences were dubbed catalysts by Seth Klarman, and they triggered value realization. Tepper began his career as a day trader in college with the goal of becoming wealthy, and has since built one of the world's most successful hedge funds. And with that, today's video comes to a close. To express your love and support for the video, click the like button below if you haven't already. Also, don't forget to subscribe to the channel and click the notification bell right next to it to be the first to know when a new video is posted. Thank you for taking the time to watch, and we hope you enjoyed yourself. We look forward to seeing you again soon.